With COVID-19 drastically affecting tech companies' revenues, Apple put up a resilient fight against it. But with COVID restrictions in China and other countries, the company is struggling to meet the predicted revenue marks. The expected losses are between $4 and $8 billion. And Apple management is not hiding the fact that the company is in serious trouble. Apple CFO Luca Mistry has announced that the company will have to cope with a number of hurdles in the current quarter. The company's sales have considerably decreased, stock is gradually going down, and Apple is trying to find solutions to various issues caused by the pandemic crisis. But there's more. Regardless, with recent policy changes about allowing only in-app advertisements, the iPhone company has faced several criticisms, especially from Elon Musk. Apple receiving the giant amount of commission from this policy change has not sat right with its competitors. Due to this, it has been reported to cost Facebook $12.8 billion in 2022, and Facebook is on the brink of complete collapse because of this change. As a result, Apple is being attacked from everywhere, and the company might be fined billions of dollars very soon. But the main question is, can Apple still survive so many problems? Well, this is a very interesting situation, so let's explain it. First, it's important to point out Apple's revenue losses after the pandemic and stock performance. Apple products have not been exempted from the worldwide decline in leisure consumer spending brought on by the coronavirus outbreak. Due to the closure of several facilities in Asia, the company's supply chain has also been hampered. A significant uptick in iPhone sales at the end of the previous year was affected dramatically by the virus. Due to its reliance on Chinese manufacturing, Apple was among the first of the big tech companies to experience the effects of the coronavirus. The business provided an update on its iPhone production facilities in a note to investors, noting that although all of their facilities had reopened, they were ramping up more slowly than they had planned. The stock outperformed the S&P 500 index, which fell 11% during the same time period, but not as well as certain competitors, such as Amazon, whose shares saw a rise of 33%. With this, the ongoing COVID-19 lockdowns in China were expected to have a significant negative impact on Apple's revenue for the 2022 April to June quarter. According to the firm, the Shanghai lockout alone could have cost the business up to $8 billion in lost sales. According to Nikkei Asia, demand for Apple devices in China may decrease further as Shanghai entered its second month of lockdown, and other cities in the nation are subject to pandemic restrictions. Apple CEO Tim Cook stated in an earnings call that they have estimated the limits to be in the region of $4 to $8 billion, and these constraints are majorly dependent around the Shanghai corridor. According to Apple CFO Luca Mistry, the COVID-related issues are also having some influence on client demand in China. However, during a summer quarter when most other large tech businesses saw their profits decline, Apple was able to increase both its sales and earnings. But this doesn't necessarily imply the iPhone manufacturer will be immune to a future recession. Subsequently, sales of Apple's most well-known product, the iPhone, as well as another significant revenue generator, the services sector, were both lower than experts had predicted. This was an indication that customers may be making adjustments in light of the biggest inflation in 40 years. Following the release of the results, Apple shares fell 1% in extended trading, continuing the slump that has been weighing on the once-flying company for the most of this year. Nearly 20% of Apple's stock has been lost thus far in 2022. Recently, Apple revealed that users and marketers must make an in-app fee to enhance a post on applications like TikTok or Instagram. Essentially, advertisers and users will have to use Apple's system to purchase boosts for their social network posts. The issue is that Apple gets a 30% commission on in-app purchases. In other words, the policy change allows Apple to receive a cut of social media ad revenue. The move also implies that social media platforms may boost prices to recoup what Apple collects from them. This move comes at a time when Apple is establishing its own advertising platform, which will allow it to increase its earnings. Coupled with this, Apple introduced its latest smartphone lineup, the iPhone 14, which features two lower-price base models, as well as two premium variants of the phone with the Pro label. Analysts predicted that the base models would suffer as customers shifted to the Pro models, which have substantially superior camera and CPUs. According to JP Morgan analyst Samik Chatterjee, the latest iPhone Pro models are expected to account for 60% of total iPhone 14 sales. Previously, in the iPhone 12 and 13 generations, it was split more evenly between the base and Pro versions, he claimed. Mr. Maestri stated that supply is limited due to high demand for its iPhone 14 Pro models. "We're working as hard as we can to meet the volume of demand," he said. According to Mr. Maestri, the company is also experiencing supply challenges for the Apple Watch Ultra, due to excessive demand. Strong Pro sales were expected to improve Apple's average selling price for the iPhone, offsetting any potential decline in overall iPhone sales. Since the debut of the Pro model lineup in the 2019 iPhone 11 generation, iPhone buyers have gradually been accustomed to Apple's upper end. Also, with the coming of 5G in late 2020, consumers in the United States have been willing to pay a premium. Moreover, in the past, Musk has raised reservations about Apple's business policies in tweets, particularly those relating to Spotify and App Store restrictions. These have been in response to Spotify leader David X's tweet, which highlighted a New York Times report on Apple's 3 rejections of Spotify's new app as the streaming service expands its offering to include audiobooks. According to Apple, the new app violates its guidelines for how developers interact with customers about online purchases. Elon Musk criticized Apple over the App Store commission it charges developers in reaction to a tweet about the European Union's new antitrust complaint against the iPhone maker. Musk called it absolutely not okay, comparing the commission to a 30% tax on the internet. Last year, the Tesla CEO publicly supported Fortnite creator Epic Games in its lawsuit against Apple for allegedly exploiting its dominance in the mobile app industry. Also, it is a well-known fact how Apple was fined billions of dollars because of violations of anti-competitive policies. Elon Musk expressed his displeasure with the App Store Commission in a series of tweets in response to a story emphasizing his former company PayPal's alleged role in sparking the newest European Union complaint against Apple. According to him, it is literally 10 times higher than it should be. That's it for today. Subscribe to our channel and hit the notification bell.